Hi everyone, welcome to Single Value. So today we're going to look at Chargepoint and Switchback Energy Acquisition Corporation, which is merging together with. So if we dive into this one first, because this is publicly listed, and it is, there's nothing going on with this company. It just holds cash, and its hope one day is that it merges with another company. Though this company has done really well in the past week or so, it's basically gone from probably in the last few weeks, to be fair, it's gone from like $13 to $26, a nice 100% gain if you go into the stock quite early. Though it's not the end, it doesn't mean you've missed out entirely. Though, let's kind of dive in and look at what's happening in the future for this company. So this company currently has $1 billion in valuation already, so it is going to merge with ChargePoint. So the main thing is, how valuable is Chargepoint itself? So this is where we look into Chargepoint and we go, what kind of company is this? So originally they were going to merge with Chargepoint and the valuation was going to be $2.4 billion. Though this company kind of jumped up so much in pricing now that by the time they merge, the pricing's actually closer to $6 billion than 2.4, because the market's just jumping ahead of this. They're pretty excited about anything EV these days, because there's a lot of countries just banning ICE vehicles by 2025 or 2030 or 2040 in some cases. But there's really aggressive targets to kind of just bring in EVs everywhere. So this serves ChargePoint in a remarkable way, and it kind of paves the way for them to succeed in a very, very nice way. So currently they service 4,000 businesses, and when they merge with Switchback Energy, they will get a net, proceeds after paying off debt of $493 million, which they'll use to expand their current business. This includes about 300 million. So out of this $1 billion, corporation, they're contributing about just over 300 million, and then there's another 200 something million coming from other investors. So so basically here you're paying like 3 times your money to get the chance to jump at this opportunity. But it's still, I'd say it's still a fair opportunity left over. They haven't taken all the pie. But of course the price has moved up considerably. It means you just have to be a much more longer term shareholder than most people would probably want to be. Like, most people probably enter this as it's been with SPACs. People enter for a month or two, then get back out. At this kind of pricing, I think you probably want to be at least a 6 to 12 month shareholder to really see a nice gain. So I think, like, I was looking at the presentations, and what really just stands out about this company is the remarkable growth in revenue. So the revenue that they're projecting, that by 2026, which is about 6 years later, is about $2 billion. And on that $2 billion, they expect to earn about $340 million. And by my rough calculations, if we just do some simple figures, I'd get about a 20 billion valuation. So if we're looking at a company that's currently at 6 billion, and we're looking at a future valuation in probably 6 years' time of about 20 billion, that's about 3 times on your the current situation. So you kind of have to ask yourself, is it worth holding 6 years to get 200%, or potentially, like, the longer you hold, the higher your return is, in a sense. But if you want the full 200%, you'd probably have to hold for 6 years, which is probably a long time for a lot of you. Like, I know my audience's age, and you guys are probably in the age group where patience isn't the best thing in your mind right now. So I imagine 6 years is not on your mind. But even if you hold for like a year, I imagine you'd still do quite well of this company. So the share price has moved a fair bit, though I still see some, at least some gains. Like, if you're willing to hold for like 6 to 12 months, like, I'd say you'd still be in a you still be able to make a nice gain out of this company. But of course, the most of the meat on the bone is really holding for this full 6 years, where they can actually get to, well, even if they get to $1 billion in revenue, that will be significant for this company. So so like next year they're expecting 198 million, which is a jump from the 135 this year, and after that they expect to go to 346. So these are ambitious kind of jumps. They're expecting about 60% compounded in their revenue, which is an incredible rate of return, particularly on their revenue. And of course, after that 6 years, they're going to keep growing. So this is one of those companies you could probably buy and hold forever, because you kind of see like the petrol stations around you right now, and in the future it's just going to be EV stations, because those are going to take over. And unlike Exxon or something, they don't have to go and drill for oil or anything like that. They just have to probably potentially install solar panels in the future, or just be hooked up to the grid. You know, the beautiful thing about electricity is it's in an abundance, in a sense. You don't have to drill the ground to get oil, which might be in limited supply. So having a source of electricity is a huge advantage for a company like this, where it just has to continue to expand its network, and it just becomes more and more valuable as it expands in more networks, and it creates a whole like situation where like it just gains so much market share that no one else can just come in and compete with it. So if we're looking at these numbers here, so revenues up to the 2 billion mark, and it would be like an operating profit of 340 million. So that they don't expect to break even until 2024, when they do generate $1 billion. So for them, they need an absolute $1 billion to kind of generate a profit, or around about there. They can't even generate a profit, an operating profit, to be exact. They can't generate that on 600 million. So yeah, though they are looking to grow. So by the time they get to 2 billion revenue, they still expect to grow by 45%, which is the real amazing thing. So yeah, if you grow by 45% on 2 billion, your next year's revenue is projected to be close to $3 billion. So yeah, like this company just compounds like crazy. The better it gets, the better it gets. Literally, it just grows on advantage on advantage on advantage. So yeah, there's a lot to like about this company, and it does hope to go from like 100,000 or just over 100,000 charging points right now to over 2 million charging points in the future. So there's a huge ambition for this company to do this. And yeah, there's a lot of brands that signed up to this company. So they have this situation where you can kind of brand it yourself. So I kind of like this whole aspect. It's like if you have a company that wants to offer their customers charging stations, they can actually offer Chargepoint stations, and then basically just brand them with their own logos, but you wouldn't know they were Chargepoint ones. So that's really cool about this. And if you look at all the brands that are signed up, as these brands and all these companies just continue to grow their the EV vehicle like network, it just means more revenue accrues to Chargepoint. So it's kind of like the thing that just grows naturally, in a sense. Chargepoint just has to continue to expand their network. These companies will continue to expand their electric vehicle fleet, and in time, they just build each other in mass. Which is the really impressive point that everything is going in the favor of this company. It's kind of like, as they say, a rising tide lifts all boats, and this is the very same thing. As they put 62% of the Fortune top 50 use Chargepoint. So that's a real huge advantage, where you're already starting off and all these big companies are your customers. So yeah, I kind of like that aspect about this company. that, yeah, everything's in its favor, and the market's only expected to grow more and more in the future. Right now is just a start, so that's kind of what I like about this company. Everything's just a start, and yeah, like, what's not to like about the company? They've got everything built, charging networks built. They just have to continue to replicate it, and in the future they're going to be very, very valuable. So I think it's still a worthy investment, even though the current valuation when they merge would be about $6 billion. So I think it's still worth it because you still get a considerable amount of value out of this. Though it won't be as much as, if you were to have done this, invested in this company 2 to 3 weeks ago. But there's still a lot of meat on the bone, and this company will continue to grow in value year after year, and that's the beauty of it. So definitely worth considering. Like, it's probably not, not something you want to just hold for a month or two and hope for a massive gamble. I think if you hold over 6 months, then I think you're going to do very well. But if you hold 6 years, you're going to do extremely well. And yeah, I think it's a pretty decent opportunity. Also, they merge at the end of the year, so you get to see the company merge and they get to start updating you. So that's also a really good part about it. If you have any questions, just post below, or any other comments, just let me know. Until next time, good luck investing, everyone.